Billionaires are moving their money fast, and most people have no clue why. Warren Buffett, Elon Musk, Ray Dalio, they're quietly shifting billions into specific assets, preparing for a future they're not publicly talking about. While average people are stuck debating on TikTok whether a recession is coming or not, the ultra-wealthy are already making the next 10 years of profits. This video breaks down exactly what they're buying in 2025 and what you can do to follow their moves intelligently. If you're serious about building wealth, hit the like button and subscribe because we break down this kind of info every week. No fluff, just facts. Let's start with the most surprising billionaire shift of 2025. Warren Buffett's investment in quantum computing. Yes, the 93-year-old value investor who famously avoids tech just made a quiet but massive move. In 2024, Berkshire Hathaway increased its holdings in Alphabet and Microsoft, both leaders in quantum computing and AI infrastructure. This wasn't about YouTube ads or Xbox sales, it was about quantum research labs and the future of encryption, finance, and medicine. Buffett's fund added nearly $616 million across these two stocks, and while he didn't say quantum computing on stage, his lieutenants clearly see where the future is headed. The quantum market is expected to grow from $2 billion in 2023 to over $90 billion by 2040. Why does this matter? Because when Buffett bets big, especially outside his comfort zone, it signals that even the most conservative billionaires are pivoting toward future tech. But while he's betting on quantum, Buffett is also hoarding cash like never before. As of Q1 2025, Berkshire Hathaway is sitting on over $348 billion in cash, a record high. Most of that cash is in short-term U.S. Treasury bills, earning over 4.8% annually, basically risk-free money while waiting for major buying opportunities. Buffett has said before, "Be fearful when others are greedy, and greedy when others are fearful." This hoarding isn't panic, it's preparation. He's also expanded his investments in Japanese trading houses, companies like Mitsubishi and Mitsui, with over $23 billion invested. That's nearly double what he held in 2023. Why Japan? Low inflation, stable currencies, deep value, and most of all, Buffett sees undervalued industrial power, where Wall Street sees stagnation. The takeaway? Billionaires aren't just moving into AI and quantum, they're also stockpiling cash, parking it in government bonds, and looking overseas for long-term value. Now here's where things get really interesting. Private credit and infrastructure funds. A recent survey of ultra-wealthy families revealed that nearly 32% of their portfolios in 2025 are now in private credit, up from 12% in 2021. What's private credit? It's when billionaires lend money directly to companies or real estate deals, skipping the banks entirely, and collect high interest, often 8 to 11% annually. You and I can't just walk into Goldman Sachs and do this, but new platforms like Yield Street or Fundrise now let retail investors tap into similar structures, starting with just $1,000. Same with infrastructure. Private funds focused on data centers, renewable energy, pipelines, and utilities are now outperforming the S&P 500. Billionaires are pouring billions into infrastructure not because it's sexy, but because it's essential, inflation-resistant, and pays solid yields. When the rich want steady cash flow during uncertain times, this is where they go. Next, let's talk real estate and what the rich are really buying in 2025. While average investors are scared of high mortgage rates, billionaires are doubling down, just not in the way you'd expect. They're focusing on build-to-rent communities in Sunbelt states, student housing and medical real estate, and most surprisingly, blockchain real estate tokenization. Tokenization lets them own fractional shares of massive commercial properties via smart contracts. More control, fewer fees. Now let's talk tech. Despite market dips, ultra-high net worth individuals are still heavy in big tech. NVIDIA, Microsoft, Amazon Web Services, and startups building AI infrastructure. They're not just betting on ChatGPT clones, they're backing companies building the roads, rails, and servers that AI runs on. And then there's the truly alternative stuff. disparate art via platforms like Masterworks, music royalties materially rights in drought-prone regions, even farmland, which Bill Gates quietly became the largest private owner of in the US. To quote Ray Dalio, diversification isn't just for asset classes, it's for civilizations. The rich are spreading risk across currencies, industries, and countries. Let's zoom out and talk about what you should do right now, even if you don't have millions. So, art with liquidity. Just like Buffett, you want dry powder. Treasury bills, high-yield savings, something safe that earns while you wait. Plus fractional platforms. Fundrise for real estate, Masterworks for art, Yield Street for credit. You don't need to be rich to act rich anymore. Final ends, not hype. AI infrastructure, real-world tech, income-generating assets. 7. Stocks aren't the only game in town. Look into ETFs or platforms giving access to India, Africa, Southeast Asia. Final, study the rich. Follow 13F filings. Read Buffett's shareholder letters. And stop listening to finance advice on TikTok from people who lease Lambos. Now that you know what the wealthy are buying in 2025, what are you going to do differently this week? If you got value from this, please give it a like. It helps more people see this and beat the noise. And if you want to keep getting real financial insight, no hype, just strategy, make sure you subscribe right now. This is Next Gen Money Now, where we teach you how to survive and thrive no matter what happens next.